Hi, everyone, and welcome to the Adyton Resources Live Corporate Update webinar. This is Paul Amputis from RBMG. Adyton Resources is publicly listed on the Toronto Stock Exchange on Exchange Venture under the symbol ADY and on the OTCQB under the symbol ADYRF. Joining us today is the company's chairman and CEO, Frank Terranova, the chief financial officer, Stephen Kelly, and the chief geologist, Rod Watt, who will go through the Adyton Resources presentation, including an update on current operations and upcoming milestones. Management will be available to answer your questions following the presentation on the Zoom webinar platform. If you are interested in asking a question and are logged into Zoom, you can submit your questions to us directly in the Q&A module. Please note, this presentation is being recorded today, Wednesday, August 25th, and will soon be made available on the company's website at AdytonResources.com. Today's call may contain forward-looking statements that are subject to risks and uncertainties that may cause actual results, performance, or developments to differ materially from those contained in the statements and are not guarantees of future performance of the company. No assurance can be given that any of the events anticipated by the forward-looking statements will occur, or if they do occur, what benefits the company will obtain from them. Also, some risks and uncertainties may be out of the control of the company. Adyton Resources' full disclaimer is available on slide 2 of the presentation. Lastly, RBMG is not a registered investment advisor or broker-dealer. For more information, please visit rbmilestone.com. It is now our pleasure to introduce you to Frank Terranova. Frank.
Wonderful, and thank you very much for the opportunity to present the Adyton Resources story. Throughout the course of this presentation, the management team will collectively go through the information. This is along one of our philosophies that, as they say, many hands make light work. I suppose from the very outset, Adyton Resources is 5.5 months young. It was listed in February 2021, and for all intents and purposes, it is a very simple story. We look at world-class copper and gold jurisdictions, and we've started off looking at PNG and through the Pacific Rim of Fire. We specifically, and one of the differentiating factors is that we've identified 2 core projects. Traditionally, companies of our size and stage of progress tend to have one project. We'll go through the presentation and articulate why strategically the option value of having 2 makes a lot more sense. Another aspect that we were absolutely non-negotiable about was having at least 1 million ounces as a starting position and assets that can grow and progress at an accelerated level. We're not here to do it simply for practice from an operational sense. We're about getting on with it, and that in part is about having a proven management team that has simply been there and done it before. We obviously ascribe to ESG principles. That's something that we understand, and in this part of the world, like any developing jurisdictions, you are there by invitation, and our experience on the ground and in the region holds us in good stead. More importantly, though, there are an abundance of imminent news flow, as well as events that may be catalysts for the story to obtain greater investor relevance. We'll go through what we've achieved to date through the presentation, and you will see once again that we pride ourselves on anything that was or is within our own control. We assure our stakeholders that our track record of delivering on our promises is something that we continue to do. I'll hand over to our CFO, Mr. Stephen Kelly, who'll just give an overview on the corporate snapshot.
All right, thanks, Frank. So just a few key points in this regard. I think we are, Addison is listed on the TSXV. We've also recently achieved quotation on the OTCQB market, and we are also trading on the Frankfurt Stock Exchange. As Frank said, in terms of the board and management, a lot of in-country experience in PNG. Frank, Rod, and myself, as the executive team, have all worked in PNG, including operating gold mines in the jurisdiction. Just means that we're not learning the ropes as we go. It's enabled us to hit the ground running and get things done quickly and cost effectively in the first few months of operations. The board has a very good mix of technical and financial markets experience. Tim Crossley and Sinton Spence and Peter Duplessis all have significant experience in PNG. And we have Nick and Jason, who are Canadian, experts in the Canadian market, to help advise us there. In terms of the share price, I think it's obviously, we would prefer that it has performed better than it has since the listing. It reflects a few things. The initial listing and the RTO transaction is a complicated transaction, and historically there tends to be a bit of noise from those transactions in the first few months as the share register settles down following the transaction. We did have, as part of the process, a couple of the larger shareholders who participated in the raising exited the register. That's now largely been completed. But the positives are that we've continued throughout the process to see good liquidity in the stock, which is always a plus. In terms of cash position, as we come to the end of the programs, we're looking to have $3 to $4 million sort of cash on hand at the end of the programs. And in terms of our trading price, where we are on an EV resource basis, you can see there it's in the range of $8 to $10 Canadian per ounce of gold equivalent, which compares favourably with our peers. It's at the lower end, very much at the lower end of the trading range for our peer group. And as Rod will touch on the exploration success that we have had to date, we'll only see our resources increase and make that an even more favourable metric for us, and an opportunity for value to be achieved as we move forward.
And I may touch on Stephen's point. We use a cut-off grade on our existing resources of circa 0.8 grams of gold per tonne. Now, if we used what our peer group traditionally uses in the region of even 0.6, that would give us close to 1.6 million ounces of gold already, even before the first drill rig turned. Now, when you apply that metric to an EV to resource basis, it now looks ridiculously cheap at close to $4 or $5 an ounce. Now, as we all know, and we look at the volatility in the markets, we live in very interesting times, particularly in the gold sector. But as we alluded to, as far as a peer group analysis, although the sector is trading at a discount in its entirety, this is wonderful value for the longer term plays that we're positioning ourselves for. I suppose when we look at an operational standpoint, since February, we have basically achieved everything that we said to the shareholders and the investors from the initial capital raise. We acquired the assets, we undertook the listing, we've completed the drilling program on Gamera, on the Ferguson Islands, and ahead of schedule, under budget, which enabled us to do some drilling on Wapaloo, and Rod will touch on that. What it's demonstrated to us is, as you'll see throughout this presentation, the results have actually exceeded our expectations substantially. We've also embarked on Fenny. Again, we're ahead of schedule. Results are imminent, but inherently, operationally, things could not have gone any better with respect to the work program. So from that perspective, we're very happy with the results, and you'll see when we go through some of the drill results and intersections, it all bodes well and validates the desire to go back and continue to progress these assets. The region in particular and why we're here. It is a tier 1 mineral and commodity jurisdiction. Multi-million ounce deposits of gold, millions of tonnes of copper. If you throw in nickel, LNG, gas projects, industrial, minerals, etc. PNG is the land of large-scale development. And really, the track record of a jurisdiction speaks far more loudly and clearly than simply a geological hypothesis. So we've got the Ferguson Islands assets. We've got Fenny, which is next door to the world-class Lahia project, 3-hour flight from Australia, and again, an area that we understand very well. The country itself is extremely pro-development. Again, by looking at the scale and order of magnitude of these assets, like any developing and fast-growing jurisdiction, it may not be the most efficient place on the planet to be undertaking administrative requirements, but geologically, it's pretty simple. You invest in drilling and money in the ground, and the results will ultimately speak for themselves. Now, why we looked at 2 projects, and early on in the piece, the strategy was Ferguson Island, we considered when we acquired it, was simply a linear path to cash flow. We expected it to be, put simply, a workman-like asset that would continue to grow in an orderly manner based on the level of exploration investment that one puts into it. And to coincide with that, for the upside or the investor relevance sizzle, we had Fenny Island, which is a Lahire-style deposit. It's had a substantial amount of money spent on it historically, but not a lot of work done on it in the past 10 years. And what you'll see when Rod goes through it, one drill hole can simply be a game changer. We're undertaking a work program that is almost complete. Results will be announced in the not too distant future, but we thought, the extreme immediate upside speculative opportunity that certain investors like, coupled with Ferguson Island, which is a near-term cash flow potential. Nonetheless, what we found is that maybe we had short sold Ferguson Island, because the results that we'll go through standalone are world-class and demonstrate that that asset has an enormous potential to grow, accelerate very, very quickly, and demonstrate the scale that we probably didn't expect so quickly into the program. At the bottom, you'll see, again, a very conservative cut-off grade of 0.8, a million ounce starting position, and with all the drill results in, particularly with Ferguson Island, you'll see one of the catalysts looming is a resource update, which we expect to be extremely favourable on those assets. We do have a number of other projects, early stage, highly prospective. Nonetheless, our focus remains fundamentally on Ferguson Island and the Fenny deposits. These assets, absent ADY, which is on Ferguson Island and will start to get a more prominent level of capital and management focus. All the others are inherently option value that we'll look to either monetize or undertake strategic relationships with other companies in pursuing their potential. On that basis, I'll hand over shortly to Rod, who is a Director and Chief Geologist, but inherently the initial proposition on Ferguson Island, we undertook some diamond drilling, and it's like anything. When you buy assets, you hope for the best, you plan to be pragmatic. There is no substitute for drilling them yourself and doing the technical work. And from that perspective, we beat a number of mid-tier existing producers to the acquisition of these assets because they are legitimately near-term production. So on that basis, I'll hand over to Rod, who'll describe what we intended to do and what we've achieved over the period.
Yeah, thanks, Frank. So look, the Gamma project on Ferguson Island that Frank mentioned, results shown here, our results are in yellow and historical results in blue. Look, key takeaways here are we've identified high grade, we've been drilling high grade. Look at some of those results we've had, you know, in intersections generally in the line of 5 meters, around 3 to 4 grams, looks significant by anybody's standards. And a number of high-grade zones identified along a 2-kilometer strike extent from top to bottom. So a lot of potential, and particularly down the south end into the extending the southern high-grade area to the lightly drilled southern area.
And an area and something that we were very, very adamant and why we were attracted to this style of deposit, as Rod has alluded to, it is fundamentally outcropping at surface. The depth of the deposit is, you know, the historical drill results were, you know, 30, 40, 50 metres. Rod and the team have drilled down to, you know, 75 to 100 metres. This will be aggressive gardening. This is not complex mining. The mining costs will be fundamentally very inexpensive. And again, a true indicator that when we say it is a project that is capable of accelerating into production, this is one of the facets that that is significant in that consideration.
Yeah, and the holes shown there in red are the holes that we drilled this year. And in this graph, you can see in this plan on the left, the high-grade zones, as mentioned, the exploration potential to the south, 2 kilometers long strike extent. And look, you can see by the sort of size of the circles that clearly two high-grade zones identified within the overall resource. Cross sections on the right show the zone, as Frank mentioned, outcrops. It's an average of sort of 5 to 10 meters thick, dipping down at 40 degrees, a nice shallow angle into a metamorphic footwall. And the section on the top right shows this cluster of intersections around this sort of new higher grade extension that we've discovered recently and shown in the map on the left in pale blue, outside of the existing resources. So amenable to mining, shallow dipping, and look, nice thick gold zones. And I think fair to say in the drilling we've done in the last couple of months, most, every hole has intersected gold almost. So it's been pretty successful for us. We've complemented the drilling with a bit of surface trenching. We did this just before we sort of pulled out. We've suspended the drilling currently as we've moved on to our Fenny project. But again, low runs of gold, and these are at surface. So look, 60 meters at almost 2 grams, including a number of high grade zones. And this will be the zone where a starter pit would look to start. As you can see, the zone extending down to the southeast, high grade zone we've identified, shown in a red circle. So a lot of opportunity for future drilling and a lot of opportunity to take the project forward as we move into technical study phase with the work. Resource update and metallurgical testing underway, as Frank mentioned. And one of the exciting things about Gamma is that Wapaloo is a sister deposit. It's about 30 kilometers away. Currently has 150,000 ounces. Historically, some mining carried in the mid-1990s, more of a test mine. But we'd look at this project adding on to the Gamma project in terms of a mine life. Gamma first, then Wapeloo will be the most likely scenario. We drilled 5 short holes here. Results are in the process of just sort of coming out. All intersected gold, runs of gold, as at Gamma. So our drilling has confirmed some of the previous work and provided samples for ongoing testing, which is one of the key objectives of the program.
And from that perspective, you know, in the Ferguson Island deposits, again, the initial strategic proposition was a near-term producer, something that could grow very, very quickly, scalable, low capex, easy mining, and from that perspective, all things currently indicate that our initial investment filter and process is extremely accurate and on track. As we alluded to, on the other side of the coin, Fenny Island, which is between Simberry, which a few of us in a previous life undertook the development and operation of that asset, which was subsequently sold to St Barbara, who currently operate that asset still to this day. You have Lahire, which is a world-class deposit, and then to the South Panguna or Bougainville copper. So the reason and something that we were attracted to was that this asset, along with Ferguson Island, they were neglected by circumstance. Previous owners who had other assets that they were focusing on, whether it be gold price, whether it be a number of cyclical circumstances. At the right time arose, we picked it up. Historically in PNG, a lot of junior companies and individuals for that matter, you could simply land bank deposits like Fenny, have a very low holding cost and just sit there with option value. The government and regulators, and from a social license perspective, the onus has moved to you either use it or you lose it. That created the opportunity. We've picked it up, and now we are extremely excited about the potential that this asset may have. We don't understand it to this date as well as we do on the Ferguson Island aspect, but Rod, you may want to give a bit of a regional setting and what our objectives are from a geological standpoint.
Yeah, and then one of the key things on Fenny is that it's the next island down from Lahire. Lahire is a global gold giant, 60 million ounces. So it's exactly the same setting. These are very young rocks. It's less than 1 million years old. The setting on the right of this kind of basement ridges and warping and fluids coming up, same setting as Lahire. And interestingly, further down to the southeast is the giant Bougainville porphyry copper gold. So basically Fenny's between two globally significant projects with very similar characteristics to Lahire. And this is the model for the exploration work and the drilling we're doing at the moment. And the map on the right shows the island. It's the tip of a volcano that's emerging through the sea, same as Lahire. Number of targets across the center of it, across the sort of a collapsed caldera central part. And interestingly, on the bottom left, you can see this the surface, and we've remodeled the geophysics. We sourced the old data, we remodeled it in a 3D sense, and came up with a very nice looking porphyry copper target. And that's been the focus of the current drilling, to sort of test the gold and the copper potential within this area. So 3 holes have been completed in that, and 2 further to the north along the gold zone trend, just to give us a feeling for what's there. It's a short program to initially get us a better understanding. Number of prospects on Fenny, you can see on the left, there's at least a dozen prospects that need follow-up, which we're looking to do work on going forward. On the right, you can see the intersections. This zone is about 800 meters long as known. It's a porphyry intrusive model, same as Lahire, fluids coming up, gold cap that we've been drilling, along with a couple of deeper holes to test the porphyry copper potential. So results should be forthcoming on this, as Frank mentioned, in the next few weeks. So the drilling here has just finished recently. We've drilled about 2,000 meters, and in the process of assessing the data and our next steps here.
And look, with respect to the program to date, as we suggested, it couldn't have gone any better. On Ferguson Island, not only were the historical grades and results confirmed, more often than not, they were exceeded and fundamentally demonstrating the underlying potential of the Ferguson Island deposits. Fenny, look, we're excited about the potential. No one has done work on that asset to any great scale over the past decade. As we get to understand the system and the geology better, the potential is extremely large. We often get asked, is the asset going to be too big for a junior? Well, that is a first world problem to have. It has 650,000 ounces of gold already, and fundamentally, again, we're looking forward to understanding that system a bit better. But all of this leads to the next steps and where to from here. As Stephen indicated in the corporate update, we are funded. The opportunity or the situation was that we raised $10 million. That was a specific number that we had in mind to do the work program, to get to the end of all the phase one workflows, and to still have circa $3 million or a little bit more in the bank by that stage, to then assess where to from here. Do we undertake more drilling? Do we accelerate technical reports? But equally more importantly, there is no capital markets gun being put to our head for an immediate capital raise. We like to have the optionality or the strategic approach that we raise capital when opportunity truly presents itself and you're not captive to market conditions. That way, we do have an element of time up our sleeve, and that's how we have always operated. There is an abundance of news flow. It's that simple. We have resource updates coming. We have drilling results. We have metallurgical test work. We have really wrapping up the success and the demonstrated potential of these assets. Our work program and our approach goes back to one of our initial philosophies. If you want to find gold, go where gold is found. The Pacific Rim of Fire is highly prospective. So when you marry up the variables of world-class geology, a management team that has experience in knowing how to operate there, results that fundamentally demonstrate not only the validation of historical work, but exceeding expectations and the underlying and demonstrating the underlying potential of the assets. Overlay that with, at this point in time, an interesting and quite volatile gold sector that provides opportunities like Adyton with respect to a peer group valuation and associated metrics. So one thing that we know that the ounce count and the resource will grow. That is why we've picked these assets. We can't control the gold price, and we clearly have demonstrated that the share markets are quite volatile, but the underlying fundamentals of the assets and the approach continue to be inherently validated. So from that perspective, I'd like to take the opportunity to thank everybody who has dialed in. I see from Paul's indications that there are a number of questions. So from that perspective, we're happy to go through them and answer questions as they arise.
Thanks, Frank. Again, if you are interested in asking a question and are logged into Zoom, you can submit your question to us directly in the chat. I will, Frank, gentlemen, I will now start with the questions received prior to this webinar. If you have addressed them during the presentation, perhaps it might be a good chance to add a bit more color on them. You have stated that Gameta will be in production by 2023. And it's a three questions that the attendee is asking. First, which kind of operation will it be? Also, what CapEx approximately are we looking at? And how do you intend to fund it?
Excellent. All very appropriate questions. Look, at this stage, and one thing that we did when we started to get these phenomenal drill results is that we internally commissioned what we would describe as a fatal flaw analysis. Is there anything that, despite the world-class geology, may inhibit us from progressing this legitimately through to production? In a short answer, no. There are no fatal flaws, and that gives us the opportunity to really post the resource update. I tend to call it a resource upgrade, but we won't be that presumptuous. But from the resource update, we expect a lot of the ounces to go from inferred to indicated. That will give us the opportunity to start optimising what the scale and what the approach might be. Using our intuitive and previous experience, we expect it to be quite simply generating a high grade concentrate on site and selling that concentrate within the Asian market to smelters and what have you. So at this point, I don't think we're going to go all the way and produce a doré or gold bars on site. Again, it's coupled with the situation. We want to accelerate getting into production. We want to limit the capex and undertake that approach. Something that we've toyed with as far as our approach is, as Rod mentioned, Gameta was always the initial starting location or deposit, and standalone, we expected that to have a minimum of 8 to 10 years plus. It may be 50 or 60,000 ounces a year. Having seen the results that we've gotten there and the anticipated results that we're likely to announce on Wapaloo, we may change the sequencing and start at Wapaloo because it's even more shallower, and then feature it at Gameta. That's all a work in progress. With respect to the capital, this asset, the appeal of it was equally, it may not be a 500,000 ounce per annum producer, but 50 to 60,000 ounces at a very high, we believe, cash margin. It will generate a significant amount of cash flow. And the CapEx numbers that we've, again, high level, we expect it to be somewhere in the order of $70 to $100 million. We suspect potentially at the lower end, given the approach that we're undertaking, that will be fine-tuned as we embark and progress on a number of significant technical studies that we inherited when we acquired the project. With respect to funding it, look, I think already we've been approached by, I'll call it alternative capital providers or sources, whether they be prepaid scenarios or gold streaming and whatever the case may be. At this point, given that we're not really sure of the true potential scale order of magnitude, it is likely that we'll continue to want to fund the initial stages of the project via equity. Again, we'll assess that in due course. So between equity, between working through and getting to a mining lease status, which will take at least another 12 months or thereabouts of process. Once we get to that milestone, we will have, I think, an appetite to consider different forms of capital as we get closer to the investment decisions and true development stage of work.
Thanks, Frank. Can you talk about how sensitive are Addison's costs to operate to the price of gold?
Yeah, look, I think, and it is, I allude to early days, and the technical studies will look at it in more detail, but inherently and historically, we've always worked on a scenario where we'd like to have close to $1,000 an ounce margin from a cash position. And there's nothing to suggest at this point that that hurdle or indicator won't be achieved on this asset. Most of the costs, as we alluded to, mining will be relatively straightforward. Processing, I think we've got a reasonable early handle on the scenarios there. Now, on both of these islands, one thing that we're starting to do a bit more work on is the geothermal potential. When Lihir started, they powered a lot of their initial power requirements from geothermal environment. We're seeing a lot of geothermal potential, particularly on Fenny, as well as Ferguson Island. So how we tap into that will have a reasonable impact on our and favourable on our cost base. So with remote islands, most of the costs will be around logistical and infrastructure support. But as I say, from all in all, we like the idea of $1,000 per ounce margin, using a circa $1,700 gold price or thereabouts. So that there is plenty of headroom. And equally, one thing, again, that we touched on, we have a very conservative cut-off grade at the moment. The ability to optimise that in a more efficient way will simply add ounces and possibly even scale up the project. And as we know, when your cost base is largely fixed, every incremental ounce that you produce has a positive impact on your on your cost of production.
Good answer, thank you. Has Addison published a resource to the market yet?
Look, we have the historical or the inferred resource on our 43-101, which is on CEDAR, and it'll be on our website. Rod and the team, with respect to Ferguson Island or even more particular on Gamera, the drilling, and dare I say it, the jury is in with respect to the grade and the results. The work now has started with an independent resource update scheduled, I'd imagine by the first or second week of September. And that will give investors, I suppose, a flavour that for the 38 holes that we drilled, the type of leverage that you can truly get with respect to these type of ore bodies, and not only the growth in size, but more importantly, and the key focus for this particular round of drilling was to increase the confidence level in the underlying ore body itself. So, we've done nothing other than, again, exceeding our expectations on the validity of the ore body and its economic potential. When we go back and drill again, it will be far more about, the KPI or the metric of stepping out and growing the quantum of ounces.
Thanks, Frank. Can you talk about Addison's plans on expanding drilling at potential targets?
Look, absolutely, and I think the one thing that attracted us to this jurisdiction, Rod and the geological team, the speed of expansion is simply a function of the economic or capital that is deployed. We could easily justify 10 drill rigs going 24 hours a day, 7 days a week. because the geological potential is there. But as they say, in the real world or in the land of junior and emerging companies, we have to make sure that we hone in and get best bang for our buck. So we intend to go back and do a significant amount of drilling. But in the meantime, whether it be trenching, whether it be doing more, looking at the geophysics or other exploration methodologies, we want to make sure that every dollar we put in the ground is focused at the highest potential target and opportunity.
And unless anybody, any of our attendees have any questions here, I'll ask the final question. What is the most difficult issue the company is dealing with currently?
That's an easy one.
Great.
I'll call it the frustration that not only us, but at the moment, and everybody in the sector is inherently experiencing. But this is life in a big city. Operationally, we are hitting it out of the ballpark. But the sector, the sentiment, the gold market volatility, everything from a capital markets standpoint has been an element of headwind. We know that sentiment changes, and when it does, it changes very, very quickly, and it can become very, very positive, in a matter of minutes. But it seems that the world has changed. The last, we've been doing this for 20, 25 years. But from a capital markets standpoint, whether it be Bitcoin, whether it be any other number of substitutes from an investment perspective, other than gold in the ground and doing the old-fashioned work of discovering it and then developing it and producing it. The world has gotten far more congested in the investor relevant space. So from that standpoint, it's really just making sure that we're well placed for when sentiment changes or turns a bit more positive. Our philosophy is junior companies, you grow or you go. We are very comfortable that we can grow organically. The geology and the disciplined approach will speak for itself. But at the moment, and we're not shy of hard work, it's simply staying the course. So from that's the greatest short-term challenge when the underlying value is not appropriately expressed in the capital markets or share market value. But at the end of the day, we've been doing this long enough that these type of assets and these companies should never be viewed as a sugar hit. They are a 2-3 year proposition where you turn something prospective into something highly economic. So we're staying the course and we remain very, very confident.
Just received a question. What is Peter Duplessis' role at Adyton, and do you see similarities between Adyton's projects and K92?
Yeah, look, Peter is a non-executive director. Peter and I worked together on a company called Allied Gold, where we developed Simberi, and we value his PNG in country knowledge. There are not too many people going around who have his operational capability and understanding of these type of assets. The similarity that I would put with K92 is more about the potential and how companies can evolve very, very quickly. Where we are an island-style deposits, and largely at surface. Obviously, Kyantu is in the highlands, and it's an underground operation. But the company itself, it was a neglected asset that had been looked over by many, many people. And the approach that Peter Duplessis and his team, and from a corporate perspective, and we have a high regard for the K92 company, it shows that if you get the right people, you identify the right asset, and you're there ready, and the trigger is or the gun is loaded for when gold sentiment is right. Things can happen very, very quickly. So they're a huge market cap, an extremely successful company, and it wasn't that long ago that people were questioning that asset and the rationale for its development. We see Adyton very, very similar in the sense that we're well placed. We're just starting to validate the true underlying potential. Now it's a matter of just, as I say, staying the course, and I think the investor and shareholder awards will be inherently forthcoming.
Perfect. Thanks, guys, and thanks everyone for joining today's webinar. Today's webinar recording will soon be made available on the Addison website, again at AdytonResources.com. If you have any additional questions that have not been addressed on this webinar, please feel free to send us at adyton@rbmilestone.com. Again, that's adyton@rbmilestone.com. Thank you. You are now free to disconnect.